Hello everyone and welcome back. My name is Greg Furman and this is the Forex Weekly Outlook for the week of March the 4th, 2019. Now, to get started this week, we're going to begin where we always do with that all-important US dollar index. We can see here that based around last week's Forex Weekly Outlook, we anticipated this move in the US dollar before, not after it happened. Now, the one thing I will say with the weekly outlook, at least the way I do it, is I'm not going to show you something that's already happened. I'm going to show you something that's going to happen. That is the whole basis of an outlook, is to show us what's going to happen, right? So when we look at this, we anticipate that the dollar is usually strong at the beginning of the month. That is already coming to fruition as we see on March the 1st. We're turning higher. We're breaking above the T-cross long, 96.25. We've got our medium term crossing our long-term predicted difference with the neural index on Wednesday of last week, giving us a very, very strong warning that the dollar is getting ready to reverse. That has again come to fruition. Our RSI is extending higher. That is immediately putting downward pressure on gold, at least on a short-term basis. And once again, as I said in last week's Forex Weekly Outlook, we would anticipate weakness in gold when the dollar strengthens. In this particular case, we were given basically a 5-day warning that gold was going to turn lower. The medium term crossing the long predicted difference in reverse of the signal in the dollar index, our neural index down, fully supported by the predicted MACD, and a break of the 40 line and a break of the 50 line on the predicted RSI. Now, in my respectful opinion, gold is still technically bullish on the year while we hold above 1280. Now, stocks are an interesting play here. Stocks continue to advance here. We did make our first test this week up against the 2870 area and we have failed. But if the dollar continues to strengthen, we've now got our GDP number, very, very strong GDP number out of the US at 2.6%. I personally was only anticipating about 1.9, maybe 2. I think the general consensus was 2.3, and we even beat that at 2.6. So that should help the equities. But again, there is going to be some dollar strength, and I don't think we should be afraid of that with the equity markets. But we must break through 2817 and break free and clear of this. And again, I will make my position very clearly on this, that even if we do break above 2817, the sellers are going to be coming out. We're not going to get a shot to the moon here on equities this year. We're going to move maybe back up towards the 2900 mark. I'm still at this point not even convinced of that. We're in our 8th year of this particular rally. Economics 101 say that it's unlikely this rally is going to continue for much longer, but it is a very, very good call on VantagePoint's part to date. January 8th, they forecasted the S&P was going higher, and it sure did that, to say the least. I think we're up over 12% on the year now. So very, very good call on VantagePoint. But again, we don't want to discount these custom indicators from VantagePoint. Our verified resistance zone, again, 2821 and an even bigger area between 2948. Your larger traders, your order flow traders, they are going to target these areas, guys, for shorts. But for now, still moving higher. Now, in 2019, there's been a very high correlation between the S&P 500 and oil. Oil taking a hit, moving lower, but we are holding and coming back and testing that critical vantage point pivot, 55.52. So oil is still okay, at least for now. Okay, now when we move into our main Forex pairs, we are definitely going to see some opportunity next week on this dollar strength. So our first pair is our Euro-US. Now, Euro-US, with my own direct clients, started putting out shorts after this, what I felt was a final push. And again, as per last week's Forex Weekly Outlook, I had stated that I anticipate dollar strength by the end of the week. That is exactly what we got. That is the whole purpose of an outlook here, is to tell us what the outlook is going to be. Now, I don't want to look backwards, I want to look forwards. That's the whole purpose of the VantagePoint software. So looking forward, I'm seeing the medium term crossing the long-term predicted difference on the Euro-US, the inverse signal to the dollar index, the direct intermarket correlation. This was basically on Wednesday. As soon as I saw that signal, we started shorting. When the neural index supported that several days later, we were adding to shorts. Now, once again, the MACD is still moving higher. The predicted RSI still above 60, but I don't anticipate a lot of euro strength next week. I think the dollar is, every dog has its day, and the dollar is likely to be king, at least for a day or two. So for now, guys, for going into next week, very easy how we do this. You can see that essentially you can just put a little line right there on last week's high. If we can't get above last week's high at 114.19, and any move towards that area right now is a decent short based around these very, very powerful counter trend indicators from VantagePoint. Now, additional opportunity may show itself also in longs on US Swiss franc. US Swiss franc pushing lower this week on some fears with India, but again, there's our medium term crossing our long predicted difference. We're simply waiting for the neural index to turn from red to green, and we should be all set to go here. Now, once again, when we take out our exact triple cross and we use our blue line predicted moving average only, 99.94 on a break of 99.94 at the beginning of the week, I think you're free to fire at will on longs here. That will be the indicator we need. You can see we've been closing below this blue line for more or less about the last 10 trading days. I feel we're going to overtake that and start extending higher next week. Now, with the pound dollar, we were working on this one in VantagePoint's live training room this week. And again, we're going to be working on setups like this extensively at the Tampa seminar at the end of March. Make sure to check that out. But I had talked extensively about this verified resistance zone up here coming in at or around this 133.60 area. We came up, basically kissed that area at the 133.49 area, and then drop like a wet bag of cement all the way down to where we currently are now, basically almost 200 pips. Further downside next week on pound dollar is likely for now, but again, likely a corrective move. You can see a little wedge formation that I had drawn in here. On the break of that wedge, started adding additional longs, but as soon as we moved up into these verified resistance zones as identified by VantagePoint, we flip it around and look for shorts. Right now, again, medium term crossing the long predicted difference to the downside. These are all the things we look for and it's not necessarily a counter trend trade here, guys. What we have to understand is the markets are only trending 20% of the time. 80% of the time, the market moves higher and then snaps lower within the normal monthly or weekly ranges. That's trading by definition. But to think that that the markets are trending all the time, or even 20% of the time, they're not. They're just general day-to-day moves. So the pound dollar likely looking to correct lower towards this critical VantagePoint pivot area down at 130.84. We can reassess if and when we get down there, but right now it does appear that that's the direction this particular pair is heading in. Now, with the U.S. Japan this week, we've had a nice break on here during that monthly cycle of dollar strength that I had talked about in last week's Forex Weekly Outlook to anticipate this past trading week. Very good when we're talking about an outlook here, guys, not showing things that already happened. We must look forward in our trading and anticipate, very much like the game of chess or Go, where we win by anticipating our opponent's next move. But we don't win by looking at what our opponent did previous. We have to anticipate their move. So right now the dollar yen appears to be making a move. 114 is not out of the cards here, guys, on a good payroll number this coming Friday. So right now the indicators still point higher on dollar yen. I will point out we're a little bit overbought here, maybe more than a little bit at 86.7, but because something is overbought, doesn't mean it's going to go higher. Accumulation, distribution, these kind of things are meaningless when it comes to a very powerful trend, or when buyers dig their heels in. The most dangerous thing you could ever do is trade something that's trade something that's based solely, off an overbought or oversold condition. Right now, the buyers are firmly in control, and that's the side we should stay on, right? Now, when we look at some of our main commodity currencies next week, the Canadian dollar under significant pressure here. The US GDP number on Friday came out, as I had said at the beginning of the presentation, very strong. Canada, however, not so much. A major miss, 0.04 or 0.4 on the reading. Horrible GDP number out of Canada. But in my respectful opinion, it was already getting ready to move higher anyway based on the monthly cycles of the dollar index. So when I see these kind of things, buying at the end of the month on the US Canadian pair is reasonable. I will point out we have very formidable resistance all the way up to 136.65 where the yearly opening price is, and I would anticipate that we could be moving back towards that area, but we've got to get through this very choppy resistance at 133.65. But if we break through the 134 area, you don't want to take profit here, guys. You want to potentially look at adding longs, okay? Now, when we look at Aussie US and New Zealand US for next week, here is the thing that I'll point out, that if the dollar and the S&P 500 rally together, that could indirectly be a positive for both the Aussie and the New Zealand. So keep an eye on that. The Aussie, we've got the major event risk here this week, of course, is the non-farm payroll number, but we also have major event risk with the RBA interest rate, the Bank of Canada interest rate, and of course, again, the non-farm payroll. So if the RBA is ultra dovish here, they're basically going to kick the Aussie when it's down. But if they take a more neutral to slightly hawkish stance, and the equity markets are moving higher, we're on a risk-on environment, buyers, even though the dollar's strong, it may not strengthen against either the Aussie or the New Zealand currency. Right now, the New Zealand is, in my respectful opinion, the stronger of the two. But again, we want to watch these levels very closely, and the S&P 500. The S&P 500, a major intermarket correlation there, that you want to watch. S&P 500 down, Aussie down, New Zealand down, the CAD dollar sells off. But if the S&P 500 is strong, those currencies, maybe not the Canadian dollar, but the Aussie and the New Zealand could benefit from that. So a very busy next week, a very busy week next week on the economic calendar. So we're going to see a lot of volatility. The critical thing, like I always say, know your levels, know your intermarket correlations, and you'll do just fine. So with that said, this is the Forex Weekly Outlook for the week of March the 4th, 2019.